Good afternoon, everyone, and you're all very welcome to Thursday's US Session Open. In today's call, we will be reviewing the volatility this morning. We've got obviously a number of charts up that we'll be kind of looking at and reviewing into today's US Session Open. There's a couple of other bits and pieces that we do obviously want to go through as well, particularly the weekly initial jobless claims, which we've obviously got a piece of information on. We'll be going through dissecting very, very shortly as well. And of course, the big talking point this morning and overnight was kind of the escalation in Chinese stimulus being rolled out in terms of that 220 million, should we say, in terms of bond sales. So volatility is still rife. We talked about it yesterday. We saw it this morning with the news out of the UK with Boris Johnson, and ultimately saw that pound rally initially off of the emergence of Boris Johnson stepping down. Now, I suppose since kind of 7-8 o'clock this morning, since that news kind of broke, we have seen the pound actually come back off that 120 level and has undone a lot of those initial impulses. So if you're looking at kind of the shorter time frames, I suppose the only thing is that, yes, that did give a little bit of optimism into today's kind of open in terms of the pound. But what does that bring with it? It brings a lot of uncertainty. It brings a leadership struggle, and it brings political instability over the next couple of months. And I think that is probably the longer run expectation of the markets now. And that's why we're getting that kind of pullback from the 120 handle, which rejected this morning just before noon. So it becomes a case of what is the longer term play in the pound. Well, we've seen the pound consistently on the higher narratives, on the higher timeframes, continue to sell off. In recent weeks and recent months, we've gone from those highs way back last summer in the 140 region all the way back to sub 120 now. Massive decline, and coming back into those weekly levels where we had that massive pound rally from around about 115, 116 during the whole Brexit debate. So pound at the minute, albeit slightly up on the day, is struggling at the minute and is holding firmly under that 120 level. So that's probably something to keep an eye on in terms of, I suppose, a level or a template for the next week or so to determine, does this pound remain consistently weak off the back of the political uncertainty, or do we see the markets actually become a little bit more buoyant? Do we see that closure above 120 and seeing the pound actually continue on a short-term bullish impulse? So that's something that I'm watching into the end of this week, into next week, and obviously into the end of July as this political ramble kind of unfolds and we get clarity regarding who is going to be leading the UK government. So again, like we talked about there on the economic calendar, the initial jobless claims is also something that I'm kind of looking at prominently at the 1:30 p.m. data print that's just come out just 52 minutes ago. And we're seeing that again, some kind of useful notes of interest is the number of Americans who file for unemployment has actually rose, and this is the highest level since December. So we talked about this week how the narrative looks to be very much changing from that of ultra high inflation, 8, 9, 10% inflation levels, to now recession. We talked about it last week, particularly off the back of the Atlanta Fed GDP revised figures, and we talked about it kind of earlier throughout this week, and now we're starting to see it now filter through in the employment numbers. So we have to be looking at these leading indicators for foresight in terms of understanding, well, you only have to look at some of the commodity prices as well. Those ultra high commodities, the corn, the fuel prices, your commodities like gold and silver, all of them are down kind of 20-25% since those kind of highs in Q2. So we just have to factor that into consideration into the broader context of the markets as well. So that is something that I'll be watching again, particularly given that we have NFP tomorrow. So the NFP tomorrow will also be a big clue, because if those numbers start to dwindle tomorrow and the unemployment rate starts to creep up or give signs of it creeping up, that's going to be the next key cog in the overall economy in terms of recession. Because if you start to see the growth coming down, you start to see the employment figures coming up, that's the demand shock really to bring down this inflation level. But obviously with it will bring a recession. And of course, high inflation with negative growth, recession brings on stagflation as well. And that's something that we've actually talked about earlier this week. I think Chris mentioned it on Tuesday Zoom, and of course something that we've kind of mentioned in our community group as well. Last but not least, really from a news perspective, is that of China. So that the 220 billion stimulus is off the back of its COVID pandemic, is obviously something that's probably going to drag up inflation now in China, given the extent of this fiscal stimulus. We saw fiscal stimulus right through the global economy, Europe, US, the UK, Australia, New Zealand over the last 2 years, and you only have to look at where their inflation levels is. So this is something to keep an eye on as well, because that could lead to higher inflation figures in the next kind of 3, 6, 9 months in China. And of course, that's only going to compound the global narrative of recession, because obviously if China's inflation figures start to increase rapidly, of course, that's going to bring in negativity into those markets as well. So just factor that into consideration. I think it's something to be very, very prominent and important about as well, particularly what's happening with Germany and their debt limits, the ECB and the broader Encompass, and of course in the US as well. So that kind of brings us then right through really kind of towards today's open. So we do have Fed Bullard and Fed Waller both speaking today as well. We do have some data coming out at 3 p.m. in Canada. And of course, we do have the Bank of England's economic advisor, Pill, speaking at 5 o'clock this evening as well. So we're just all eyes really on Thursday. Thursday does tend to be the busier day of the week in terms of volatility, in terms of market movements. So we'll obviously be watching the price action through the course of the afternoon. Now, let's get down to business. Let's look at some of the price action. So we can see this week, S&P, Dow Jones, and the NASDAQ all following very, very similar kind of runs in price action. Okay, Tuesday, we had that massive sell-off into the open. We then rallied into the close. Wednesday into, I suppose, Thursday evening, we got that massive impulse. We flagged back down. And so far, at this moment in time, all three US indices are consistently grinding higher. Okay, we've done the same on the S&Ps, flagged lower, rallied off of kind of Tuesday's open. Took a lot of people by surprise, actually, this sharp selling, rallied into this consolidation yesterday, and of course overnight the S&Ps has broke to new highs. So the S&Ps and the NASDAQ are both sitting on local highs for the week, whereas the Dow Jones is just approaching that level as we speak. So literally from here, if we're taking out this 31,200 level, which we're kind of doing at the minute, I think it's going to give optimism for the market to try and rally a little bit higher. And of course, that would mean that the indices, potentially speaking, could get that a little bit of a push back into some of these levels that we sold off from into last week's month end. We saw the 28th of June, massive sell-offs on all three indices, massive sell-offs, and obviously massive sell-offs here in the NASDAQ as well. But we're undoing a lot of that selling into month end. We're seeing a little bit of a squaring up of the books into from early selling into month end, of course, then buying back into the beginning of Q3 and H2 as well. So we also just have to factor that into consideration into the broader markets, and seeing as well that the S&Ps, NASDAQ, and of course the Dow Jones are all trying to push through. So if we're going to continue pushing through the afternoon, there's areas of interest up here around 31,600 on the Dow Jones. We've got an area here around 39.20, 39.30 on the S&Ps. And on the NASDAQ, we've got this local area up here around about 12,000. We have wicks extending into about 12.1. So this will be the area that I'll be looking for as well. Can the price action get back into these regions? Now, of course, a lot can happen in that first half an hour. So again, I'll be watching the price action just more consistently to see, are we getting those intraday breaks? Are we getting those intraday moves as well to kind of propel ourselves beyond that as well? So that's pretty much kind of where we are. Now, when we break down into the smaller sessions, we can obviously see pre-market this morning, NASDAQ very much confined into this region. So we have local areas here, value highs around about 11,930. We have value lows coming in at around about 875, 880. And this is very much our point of control, because the price action at the minute, NASDAQ since 6 o'clock this morning for the last 6 hours or so has been very consolidated. So we would be needing the price action to take out some of these shorter term local highs here in the 15s and 30s to give ourselves a more elongated impression of where the price action is going to go. Okay. Similarly, again on the S&Ps, we look at the S&Ps slightly more bullish in comparison. If we go full screen for a second, we can see it as well. It's sitting up near a value high region for the day from those 6:30 price action this morning, very much sitting between kind of 38.50, 38.65. So if we're breaking through, we want to be seeing the price action break through this 38.65 level, take out some of these wicks and rejection levels, and obviously continue progressing higher through these value highs. And of course, from a low perspective, as we said, 38.50 is our benchmark. We've been holding that since very, very early this morning, and price action is remaining fairly consistent to the upside, albeit within this range. So we just need to see these ranges being broken out to say that with definitiveness, that the price action is probably going to come back up into some of these levels that we've kind of talked about on the higher time frames, and continuing off this bullish sentiment that we've seen since those midweek reversals here on Tuesday, off of those lows as well. So similarly, again, Dow Jones is actually breaking through on the 30 minutes. So if we go full screen as well, but just ahead of the open, we are seeing the markets obviously continue to break higher. So again, this area here between 31,200, 250 will be the area to see, does the price action hold above it? If we start to see the price action coming back down, that's going to bring in this low down here, 30,900 back into play again. This area that we've been kind of focused on for the last week or so, given that the price action yesterday held above it and we got that impulse and pullback very, very late last night, and the price action since then has continued to churn higher, it would give a little bit more optimism for the markets to continue pushing higher into what is, as I said, a very, very volatile week this week. Now, I suppose as we get towards the open, just kind of going in on the higher timeframes for a second, all three, NASDAQ, S&Ps, and of course the Dow Jones, all pushing higher initially on the open in the first 30 seconds. So buying volume is coming in again here in the open, and we are seeing that very, very prominently. But of course, give the markets a couple of minutes to breathe, because you do tend to get chop, you do tend to get wicks both up and down. So it's just important to have a bit of clarity. You don't want to be buying the high for the price action ultimately to sell off again. So that's why I tend to give the price action a good 5-10 minutes just to breathe, get the lay of the land, just to kind of mitigate around the chop that you tend to see on the open interest. And of course, then to kind of set a narrative, set a theme in through 3 p.m. for that letter, the D letter print on the market profiles. And of course, setting a theory beyond that. But as we speak at the minute, initial buying is coming in on all three. Decent buying initially. So we're up about 7-8 points on the S&Ps. NASDAQ is up marginally here, about 40 points. So again, S&P is a cleaner asset there to trade so far. And of course, the Dow Jones in the first minute or so is up a modest 30 points. So S&P is the best performer of the three so far. Definitely leading the way in terms of the progression to the upside in the last couple of days or so. But it'll be interesting to see, can the Dow Jones continue, given that we've broken through this 31,250, 200 level here, can the price action continue trending higher and get back into this 600 level? From the early signs so far in the open, it looks to be the case. But of course, let's see how that progresses through the course of the afternoon. All right. So that's pretty much rounding out the price action. Of course, if we look at the pound, or the dollar, should I say, we're still seeing the dollar remain a lot of its bids. So still hanging on to this 107 level from that break on Tuesday that we kind of talked about, still flagging higher and still taking out this region of interest that we've kind of talked about here as well in this 107, 107.20 level. So it'll be interesting to see, does the price action continue turning higher, because we are making successive highs and lows here as well. So that'll be interesting, given that the dollar is still holding its strength, but yet the US indices are still cropping up higher as well. It's a little bit of an enigma. Again, in the gold prices, gold has actually sold off yesterday right into this 1732 level, which Chris alluded to. I had a level a little bit deeper on that, going off of some of these lows that we formed last August and last October. We didn't quite get there yet, but the price action extremely bearish in the commodity markets this week as well. So just have to factor that into consideration in terms of your pricing as well. And meanwhile, obviously in the pound, we are seeing that FTSE rally. So despite the pound obviously holding under that 120 level, we've talked about here this morning and this afternoon, at this 120 level, the FTSE is actually still climbing up. So despite the negativity and the uncertainty with the politics in the UK, we are still seeing the FTSE kind of grind higher as well. So it'll be interesting to see, how does it react at these local highs here around 72, 72.35 to see, does it potentially break through it? If not, it could be another unwind back into the 7,000 level again, over this negative uncertainty that could potentially come through as well. All right, so that's pretty much it for the afternoon, guys. Indices, as we know, it's still holding the bid. Largely speaking, Dow Jones coming off a little bit, NASDAQ at local highs, so it'll be interesting to see, does that become more reaffirmed? Does the price action continue to elevate itself into 3 p.m. and into obviously the latter part of today's session as well? All right, so that's pretty much it for today, guys. Thanks a